Welcome to TheStreet.com TV. I'm Aaron Task here at the Spring Street Natural Restaurant in Soho with Cody Willard, manager of C. L. Willard Capital and longtime contributor to RealMoney.com. Cody, great to see you.
Good to see you, Aaron.
So before the food comes, I have to ask you, you're a News Corp shareholder. They made a huge bid yesterday for Dow Jones, obviously.
Genius.
So you like the bid?
I love the bid.
Why is it a good deal for News Corp?
As you pointed out on the site yesterday, almost immediately, it's a preemptive theft of their major competitor of what
they're striking a blow against CNBC, right?
Right. Fox is about to roll out this Fox Business Channel, and so CNBC is obviously in the crosshairs on that. And what they did, they basically just took all of the, as I wrote then, the last 1 million. Our partners, as when CNBC has said, our partners at the Dow Jones and Wall Street Journal,
they stole that.
They just stole that credibility.
Right.
So it lends credibility to the brand new network before the network's even started.
Okay, so I agree with you there 100%, but from an economic perspective, are they overpaying? And already the Bancrofts have said no, it appears, to $60 a share, so maybe Murdoch's going to have to pay up even higher.
Right. It's a $5 billion bid. YouTube was $1.7 billion. Skype is $4.3 billion. I think, if you're going to look at it as it's a 14.7, 15 times EBITDA, which is, basically about a 50% premium to what the other newspaper deals.
It's pretty reasonable, it seems like.
Well, it's reasonable, although it is a 50% premium to say what the Tribune deals and the other types of newspaper deals have been done at. Now, that being said, I think something I've been arguing and why I like the Dow Jones even before this deal is that anybody, as we've talked about so many times, the content owners, content is king. Dow Jones is a content owner, a content producer. Their outlet for distribution, their outlets for distribution are exploding. That's what this is all about. MySpace, the million different web properties are now going to end up being outlets for.
Right.
Let's keep it real. Dow Jones on MySpace, probably not the
most exciting thing on YouTube or MySpace, but I would say the difference between Dow Jones and Tribune is Dow Jones has the Wall Street Journal and the WallStreetJournal.com. They have the premier property in the financial news space, and I could say that even though I work for a competitor of theirs. But there's been talk that Google might come in. Do you think that there's any reasonable chance that happens?
I'll sell my Google if the minute Google starts trying to buy content, I'm out of there. That means my entire thesis as Google as a de facto distributor and conduit to all the world's information is wrong. And hopefully they don't start messing that up. Although even this whole, their little news bit this week coming back after Viacom, I didn't really understand what they were talking about there either. Okay. They're starting to lose it, as we've discussed before. Right. So what can you do?
Still de facto
but no, Google's not buying Dow Jones. There's zero chance of that.
And you're holding your News Corp shares.
I am. In fact, if the stock gets hit more, I'll start buying it again.
All right, Cody. Thanks very much.
Hey, no worries. Thanks, Aaron.
I'm Aaron Task here at the Spring Street Natural Restaurant with Cody Willard. Stay tuned for more of TheStreet.com TV.